Good afternoon. This is Pat Walker at Mission Winners. Hope everybody's doing well. Hope you all you're having a good, safe holiday weekend, Memorial Day. Anyway, we're taking a look here at the ETFs. Why do we look at the ETFs? It's not that we want to look at a million different charts. It's that we want to be prepared. Areas where there's strength that we could possibly put money in and make money. Areas to avoid. And as you can see, by the way, you can always tell the ticker symbol right up there, BOTZ, robotics. It's picking up. There's no real clean entry here, but it's acting fine. Okay. What has it been saying? Maybe I should look into some robotic stock. There you go. Cloud computing starting to pick up. A little bit of volume here. You can see the shelf across here on the weekly. You can see it on the daily too. There you go. Would be nice. Maybe form a little handle here and then take off. Okay. But what else does it say? Hey, technology, cloud computing stocks are acting okay. There we go. Commodities. What does this tell us? Stay away from commodities. There's nothing good going on with commodities. Continue onwards. The diamonds are lagging. Avoid Dow, most of the Dow stocks. Look, it's not doing anything. Leave it alone. Continue onwards. Right here. Dow Jones Internet. Technology related. You look and go, oh, that's not too bad. You're exactly right. It's picking up. Technology. Here's a longer base here also, as you can see on the weekly. And I'll do something for you. There's a downward sloping trend line. We can do this though too. Just to show you, nothing fancy. There you go, simple flat line. And look at the volume spikes here. Up on good volume, down on less volume. Up on good volume, down on less volume. Up on a pickup in volume. Perhaps it's going to push through these weekly tops right there. Something to take a look into. FDN and also maybe the tickers that the companies that they own. Wouldn't that be nice? FDN, potential opportunity. There you go. Continue onwards. IBD 50 is lagging. There's not a lot of power in the IBD 50 right now. Tells you the market's still relatively selective in various areas, okay? Micro sectors, FANG, picking up a little bit. Look at that. Micro sectors, FNGU, you could punch that up and say, what are their holdings, their top 10 holdings? Now, it's extended here. And I also have to tell you, FANG stocks, you know what they are. Kramer talked about them. Yeah, are we involved with them? All I can say is this. Think MAXLIST. Think MAXLIST. There it is. Money made. We didn't have a video on this. Right here, First Trust Dorsey, right? You can look and say, what do they own? And avoid it. There's no power there right now. China, stay away. There's no power here. Look at this. Leave it alone. And by the way, I'm not getting geopolitical or any of that stuff. I'm just saying Chinese stocks ain't doing it. Move on. Gold miners, lagging. Leave it alone. Gold, lagging. Leave it alone. Biotechnology, leave them alone. Oil and gas exploration, lagging on the weekly, the daily, leave oil and gas exploration alone. Software technology, oh, this has been picking up, and it has been strong. Gosh, I wonder if we own any software and technology stocks. Oh yeah, I think we own maybe around 14 of them. There it is. It was telling you to go there. I love that. Medicine, stay away from medicine. I think they need a vaccine or something. Okay, I'm teasing, but you can see, not a lot of power in medicine, leave it alone. Mid caps, not a lot of power, leave it alone. Aerospace and defense, nothing, leave it alone. iShares, home construction, it's okay, but it's lagging here a little bit. Stay away from it for now. Growth, oh, look at the growth picking up. IVW, oh, interesting. Growth, let me think here. Yeah, growth, what are some growth stocks? Think MAXLIST, there you go. Think KeyList, there you go. Small caps, lagging, be careful with small caps. Real estate's lagging. Stay away from real estate. Transportation, it's okay with a base right here. Needs to show some pop through that top. Doesn't look as bad as a lot of the others. You can see the base. Transportation, something to chew on. Airlines related to transports, but it's, there's some overhead in here, all right? But there's some clean tops right here too, and I'm going to draw this for you. This is what we do at Mission Winners. It's nothing fancy, and I love that. You know what I like? Clean and simple basis everybody can see. Let's be really pragmatic here, okay? Think this through. Why am I hung up on clean and simple basis? Here's why. It's easy to see. If it's easy for us to see, does that also mean it's probably easier for other people to see? Yes, it is. Does that mean and increase the potential that they'll buy also? Yes, it does. Now you're connecting the dots. That's why we do what we do. Mid-caps chopping around, not a lot of power. Be careful with mid-cap. Oil services, no power there. I'd leave it alone. Okay. Pharmaceuticals, no power there. I'd be careful with that. Nothing going on. Oh, dynamic software. Software stocks. Gosh, let me think here. Gosh, and Microsoft, I think, is in that group. Yes, we own some software stocks. It's been acting okay. There you go. Now, here's a long weekly base, and it just lifted off here, right? Just lifted off. Now, here's the one kicker, and this is for everybody. You can say, oh, that's a good lift. What's the average daily volume on this? The average daily volume on this is probably like 6,000 shares a day. Folks, it's trading by appointment only. Be careful with that. But at least it's telling you something, and that's why we look at it. You don't have to buy this, but you can say, oh, software's acting pretty good here on the weekly and the daily. Look at some software stocks. Now you're getting it. That's what we do. Remember this. We have a limited amount of money. We have a limited amount of time. There are two assets that we hold, that we need. Protect them. Use them wisely. QLD, NASDAQ 100, working. Let it work. There you go. QQQ. NASDAQ 100. What does that tell you? And it has been telling you way back here, which is why we are heavy in NASDAQ 100 stocks. I mean, heavy, like I think almost every stock we have is NASDAQ 100 stocks. It's been leading. Just get in line with it. I love that. No forecasting. Retailing's lagging, leave it alone. Silver's lagging. Look, there's no power there. Just like gold, leave them alone. Continue onwards. Steel, there's nothing there. Leave it alone. Semiconductors picking up. Oh, now that's good to see. Semiconductors. Gosh, I wonder, are there any stocks that are like big stocks, NASDAQ stocks that are semiconductor related? Oh, yeah. I think there's a few of them like ARKG. I think Lam Research fits that bill, LRCX, and we own them. And again, I'm not bragging. Please, I'm just pointing out. I share this with you. Systematize. Look for the leading groups and then find leading stocks in those groups. Look for clean and simple bases everybody can see. Focus on that and turn off the noise. Now, I also have to say this, though. Does it work every time? Nothing works every time, folks. So what do? If you have a stock that breaks out of a clean and simple base, but it fails, control risk. Price is good above the line and bad below. And that'll really help you. Let's continue onwards here. There's SMH, we just did. Spider's picking up a little bit. S&P 500. S&P 500. Look at SSO. That's picking up a little bit. How about that? And solar's lagging. Avoid it. Small cap lagging. Avoid it. Uranium lagging. Avoid it. Oil lagging. Avoid it. Consumer discretionaries picking up a little bit. Okay, maybe the consumer's coming back a bit. That's good to see. That's good to know. Consumer-related stocks. Okay, aerospace and defense, nothing. Leave it alone. Done. Biotechnology, lagging. Leave it alone. Home builders, lagging. Leave it alone. Building materials. How do you build houses? Oh, you need materials. Well, the house is not doing much. Neither is materials. Just avoid it. That's it. Simple. Communication services. Oh, what is that? Oh, that's technology related. I'll be darned. There you go. Technology related. Energy lagging, leave it alone. Financials lagging, leave it alone. Industrials lagging, leave it alone. Technology. Oh, you know what? I think we talked about technology about 20 seconds ago. There you go. Look at the clean and simple base. It's leading. Now you say, well, I don't own this one, but it's been telling you, hey, maybe I should look at some technology stocks. There we go. Consumer staples, nope, leave it alone. Healthcare, leave it alone. They need a shot, don't they? Okay, that's dad humor. There you go. Consumer discretionary, picking up a little bit with the consumer. That's good to see. Now, I'm not saying buy this, but the consumer is starting to pick up. We like that. Consumer getting involved. Metals and mining, avoid them. Done. Oil and gas, lagging. Leave it alone. Retailing, leave it alone. Software, oh, technology related. I'm not saying buy this. This is an important lesson, by the way. This is thin, really thin. I mean, folks, take a look. There's days it does 5,000, 6,000 shares a day. There's a day it did 2,700 shares. It's trading by appointment only. Be careful with it. I'm not saying buy this. I'm not saying avoid this, but I am saying this software starting to pick up. Technology related. There you go. So now let's go in with the MAXLIST here. There we go. Apple picking up across these tops. Here's the weekly, folks. Look at this. If this starts to take out the tops right here, that could be, and again, this is for MAXLIST stuff, okay? That could be a buy if the market's good and there's volume in it. Apple, something to watch. Amazon's working. This has been good to us quite a few different times. And it lifted off again Friday. If this follows through, taking out the highs here, that's something to take a look into. Amazon. Now, it's a bit extended from that base right here. So what do you do to control risk? If you buy less shares. Continue onwards. Alibaba, there's nothing there. So, well, maybe it's going to bounce. Why try to go with the maybe when you can go with, oh, strength. Oh, strength. Maybe some strength. It just hit new lows for the move. Stay away from it. Done. Here we go. I'm sorry. Continue onward. BIDU. It's lagging. Leave it alone. There's no power. Google is working. See this clean and simple base on the weekly? I talk about these all the time. Here it is on the daily, and look at the volume igniting on that bar when it finally took off. Look at the volume. And then the next day, more volume. See this little shelf right here? Across these tops? I already have price alert set. That's something to watch, folks. Okay? Just if the market's good. Continue on. Goldman Sachs, there's nothing good there. Leave it alone. MasterCard, there's nothing good there. Leave it alone. By the way, this is a great lesson. This is why I talk about clean and simple and why I taught it at the IBD meetups for 12 plus years. It breaks out, runs up, closes near the highs. Next day, takes it back on just a bit of less than volume. The next day, closes down but on low volume and then falls. Never argue with price. Price is good above the line and bad below. You don't need to day trade. You don't need to look at 5-minute charts. Just look at the daily. Price is good above the line. Look at the weekly. Price is good above the line and bad below. Done. Keeps losses very small. Meta is working and has been working. Look at the weekly. Is that nice? Look at this weekly back here. You know what that is? That's sweet potato pie. And it's working. You're in great shape. Let it work. Let it work. Meta. And that's why these buys here, this is why we ride trends. Let the market do your work for you instead of your eyes and your fingers. It makes life easier. And I tell you this is the honest to goodness truth. I wish somebody would have said it to me years ago. Hey, what are you doing? Let the market work. Always control risk though too, okay? Microsoft, look at the clean and simple base entry right here. Look at the volume pickup on that bars. Look at the trend. It's working. Let it work. Now, if you don't own it, don't get emotional and buy it up here, okay? That's too risky. Buy right, sit tight. Don't chase price. High emotions and good investing are mutually exclusive. Look at this cup and handle formation. We made videos on this saying, well, it's forming a little, watch this, you'll love this. It's like, and this was an actual video that I did for the VIPs. Lift up, forming a little handle. Maybe it'll take out this handle, and that would be a good buy. And again, the weekly did it. Here's the daily. Oh, gee whiz, look at the volume that came into this. That's where it was bought, right through here. Not up here, here. A couple of add-ons in great shape, and this is where we're at now. Look at this, bouncing off the rising ADMA. Remember that too. I made videos on this. Resting on the ADMA. If it bounces off the ADMA, maybe we could buy more. It did it. Now, is there anything to do with it now? No, you're in good shape. Let it work. Continue on. By the way, if you don't own it, don't buy. NVDA has been what you call a gift. Look at the buys in here and look at the trend on the 21-day moving average. That, and look at that base there, and then boom, off again. And then it had earnings, and we're just letting it work. There you go. I'm thankful and humbled. Leave it alone. Don't add more there right now. Tesla starts to pick up. You've got resistance here on the weekly, okay? It's a little loose, though. Be careful with that, all right? Just for this stock. Have we ever made money on this stock? Oh, yeah. Oh, yes. But right here, it's a little loose. Not a really clean entry on it at this point in time. There you go. Visa, nothing there. What's Visa's sister stock? MasterCard. Look at Visa and what it's doing, and then watch this. MasterCard. MasterCard dropping, Visa dropping. What's it tell you on volume? Stay away from them. And it said stay away from them. They didn't break out, so you wouldn't have bought them anyway. Anyway, that is an overview of the MAXLIST stocks. Potential opportunities, areas to avoid, and trends to ride. More money is made. This is the honest to goodness truth. More money is made riding trends than doing anything else. Buy right, sit tight.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.